Hello everyone, Clifford Bennett, Chief Economist at ACY Securities. I hope you're having a spectacular day. Well, you should remember that every day is a personal choice as to how happy you are. The circumstances, they come at us from every direction, but we can choose to be happy regardless. And I put that message out to you today.
Hi traders, and thanks for watching.
We'd like to take this opportunity to thank our incredible viewers for tuning into our channel.
We would greatly appreciate it if you could hit that subscribe button, as we're pushing for the 10,000 subscriber mark by the end of the year. Now back to the video.
On markets, how can I help? How can we make some money? I think to recognize, for instance, the Australian stock market in particular has just been a washing machine for many months now. Please do have a look at your weekly chart and you'll see that it's pretty much sideways for a very long time, and just wide weekly ranges sometimes, wide daily ranges too for a while, but at least they have calmed down. So it could be an opportunity here to start to look for what could happen in the Australian equity market. And I do note that the bullish sentiment that persists throughout the funds management industry is all, of course, about they just want your money, so they have to be bullish to get you to give them your money. But it's also, and by law, you have to give them your money, so it's a bit of a gravy train. But they have been bullish even in the absolute return section of that industry, really driven bullish about the Australian market because the US equity market has been doing so well. But as you know, and we've spoken of this before, if you strip out the Magnificent Seven from that US 500 index, for instance, there's 493 stocks there that are up about 3% or flat. They've basically been treading water this year, while the Magnificent Seven were up like 60%, and so the overall index looked like it was healthy, but it's only for a very limited number of stocks. So take that point now and apply it to the Australian equity market, where people have been buying Australian equities because the US stock market looks so good, but the US stock market isn't so good because the underlying Main Street economy of the US isn't so good, and because inflation, as we just saw yesterday, is rearing its head again. Now people say, oh yes, but it's still only 3.7%. But the important point that the Federal Reserve is going to note about that inflation data yesterday in the United States is that it has jumped from 3% to 3.7% in just the past 2 months. That is a significant reacceleration. Now, it's nice that the core number is down modestly to 4.3%, but 4.3%, unlike the headline number, which is a big collapse from those extreme numbers we saw, at least, the core number is still at historically extreme levels. So you need to see that core inflation number collapsing before you start to think that the Fed will shift it all away from a rather serious tightening bias. In fact, that inflation number yesterday, all of that data yesterday, makes a Federal Reserve rate hike more likely, but not immediately. They'll stick with jawboning, hoping the oil price will drop back. But it means that the Fed could actually hike interest rates again 2 or 3 meetings from now. If this inflation data remains strong, that's what they're going to do. Because the longer it stays at these levels, particularly that core rate at 4.3%, the longer it stays above 4%, the more entrenched expectations will become. We just saw that in some US data as well, that expectations are reaccelerating as well for inflation. That's going to really concern the Fed. So, people who talk about that pivot and interest rate cuts in the United States, it's so funny. They should be on, stand-up comic shows, really. It was never going to happen. And they're still saying it. It's really funny. Even big organizations, I think the chief economist Morgans came out last week and said, oh yeah, they're definitely going to be cutting rates next year. They said that for this year, last year, and I think the year before. So it's still a diabolical situation for Main Street US economy, which means the US stock market, in terms of its indices, looks better than it actually is, which brings us back to the Australian equity market. This long sideways washing machine period will not last forever. It could last, I suppose, another couple of months, but it is worth beginning to pay attention to which way you think the Australian stock market will go when the global backdrop is that really only 7 stocks, which we don't have, were driving the equity market bullishness in the US, and all the Australian market can manage, being very bullish, by the way, the funds management industry, and all the market can manage is to go sideways. It points to a vulnerability, particularly when the Australian economy clearly is starting to shift gear into recession already. I note some of the major publications and media organisations in Australia are now talking about an Australian recession. We said a year ago, I was on ABC News a year ago, and I said in a year's time we're going to be having a recession. We saw this well ahead of most people. And again, you know, I would point to the fact that it's probably going to get a lot worse in Australia than people anticipate at this stage. So the domestic economy isn't going to be doing well. Now, on the external front, we have a global recession. Now, if you think that's some hyperbole, it's not. The actual economic data, the global manufacturing PMI, is in contraction. The global manufacturing sector is in recession. And with the problems in China and Europe continues to deteriorate, the United States is doing far worse than most people give it credit for. Wrong word, credit deficit for. So the outlook for demand for Australian raw materials is not that bright at this point. Sure, demand will stay strong, but perhaps demand has been overpriced in terms of the equity valuations of some of the Australian miners. Now, if the miners start to shift lower, and the Australian banks, remember, are the bankers to some of the world's largest mining companies, and the Australian banks start to shift lower, the Australian stock market overall, in a situation of a slowing global economy, a global manufacturing recession, and a domestic economy headed into recession, that's not a great outlook for Australian equities. So, for the moment, it's still in the washing machine going sideways, but at any point, that sideways movement could tilt into a downtrend. And I think people should really pay close attention to that. Also, keep an eye on the Australian dollar. If it goes under 63.50 support level, it's probably going to 59 cents. Just a little added bonus tip there at the end of today's video. Have a great day. Thank you very much. Clifford Bennett.